even.
Right.
It's kind of sputtering, and it's not going to persist without some sort of government support.
I think you're dead on China. I do think it moved the markets today, and we're going to get a brief on that right now. We've been remiss not to do that through a busy morning. And Curran joins us in Washington, of course, with these years of experience in Hong Kong and living the Chinese escape from COVID. He is our global economics correspondent. And I looked at the nuance of a property market worser. What was worser for you in the report of China?
Disappointment across the board, Tom. Look at youth unemployment up towards 20.4%, another record level. 12-odd million graduates coming onto the marketplace in China this year. That's going to be a real concern for China's recovery. Of course, then you had retail sales missing forecasts, industrial production missing forecasts. And by the way, they were being compared against a weak base from a year ago as well. So really soft numbers for China across the board. And you'd have to say probably disappointing. Remember a few months ago, we were all talking about, wow, China's reopening now. Let's see where these rocket boosters go in terms of consumption and industrial production. How does it spill over? How will it impact global inflation and everything else? All legitimate questions at the time. But here we are now in May, and it's looking like something of a fizzer, so to speak.
Well, unless there is some sort of investment by the government, unless there is some sort of support or stimulus, how much discussion is there about the PBOC, about the Chinese Communist Party coming out and injecting more cash into the economy?
There is always discussion around more public support for the economy, Lisa, for sure. I think one of the critical takeaways, though, will be what's happening with youth unemployment in particular. We know, of course, how job creation is the modus operandi of the government there. We've had some comments from the official sector, or our colleagues in Beijing were reporting on, making the point that they will be taking steps to ensure jobs are created. Some economists are making the point that the recovery kind of favoured low-end services workers rather than, say, more educated workers up the value chain. Those are the ones that are losing out this time around. That certainly won't be an easy story to fix, given the broader, difficulties that China's technology sector is facing, given the US tensions. So I think there might be more support coming, but an interest rate cut isn't going to turn this around. Clearly, youth unemployment needs to be addressed, and obviously broader government spending will be needed to pick up the